Good afternoon. It is Monday, June 17th, 3:50 p.m. people. Stock market about to close in 10 minutes. Been kind of a quiet day in the news. I get a sense that we're on the verge of something, though. I really do. I don't know. It's just something, maybe it's me. It's been kind of like eerily quiet, and something is due. That's the sense I get. I think the big news today, one of the items anyway, was this Empire State Manufacturing Survey, which just fell off a cliff, to be honest. Business activity took a sharp turn downward in New York State, according to firms responding to the June 2019 Empire State Manufacturing Survey. The headline General Business Conditions Index plummeted 26 points, its largest monthly decline on record. On record. I mean, we're talking about a monthly decline of 26 points, the largest decline on record. I mean, we gotta, like, when we hear that, our ears have to be like, we gotta perk up. To negative 8.6. New orders receded, while shipments increased modestly. Unfilled orders fell. Delivery times and inventory moved slightly lower. Labor market indicators pointed to small declines in employment and hours worked. The pace of input price increases was little changed, while selling price increases slowed. Indexes assessing the 6-month outlook indicated that firms were less optimistic about future conditions than they were last month. So the next 6 months doesn't look any better either. So this economy is kind of really just grinding to a halt right now. Notwithstanding, what they're trying to do to keep this stock market up. So I saw this article today, Nouriel Roubini, smart man, right? Brace for global recession by 2020. Now he's predicting a global recession. I think in sometime in the second or third quarter of 2020. Some people say we're already in one, or that we might not get out of 2019 without one. A global recession is coming as early as next year, as risks have intensified, according to one financial expert. In a commentary for Project Syndicate, Nouriel Roubini, chief executive officer of Roubini Macro Associates, warned that the risk of a global recession and crisis in an already fragile economy is rising. So when you see Empire State Manufacturing surveys like this, okay, when you see what's happening with retail, debt, okay, the risks are rising every day. The reasons for the potential recession, he said, mainly involve the delicate state of U.S. foreign affairs, these tariffs with China, and the imminent threat of stagflation, the combination of rising inflation and slow growth. I said that, I had that exchange with my friend, right? I said, I guess he never heard of stagflation before, those 1970s stagflation, where you could have rising inflation and slow growth, right? And that looks like where we're headed, people, okay? And this guy, he knows his stuff. There's no doubt about that. Roubini previously served in the White House's Council of Economic Advisors during the Clinton administration. Last month, he warned of the consequences of a mismanaged relationship between the U.S. and China. Now, he said, the uncertainty is beginning to materialize with the ongoing escalation of tensions between the U.S. and China concerning trade and technology, substantially adding to the likelihood of a global recession. Okay? So, I mean, it goes on to talk about some other things, but I mean, you got some smart people here who are already calling for a recession, all right, if we're not already in one. Now, some of these statistics, though, you got to take with a grain of salt. I followed his GDP Now very closely, as you know, and the Atlanta Fed, last time I reported, the number was 1.4%. They came out with a new number on Friday. It's up to 2.1%. Now, that's a 50% increase, okay, in only a very short time, all right? So these numbers, I mean, they're all over the board. Now, not only did I look at the Atlanta Fed this time, but I looked at the New York Fed's GDP forecast for second quarter. It drops to 1 from 1.5, okay? That's a 33% decrease in the other. These numbers are all over the place. I mean, when you have people compiling numbers and they're up 50% one day and down 33% the next day, what are they doing? New York Fed's GDP Now cast for second quarter drops to 1% from 1.5. So Atlanta Fed went from 1.4 to 2.1. New York Fed went from 1.5 to 1%. Are they looking at the same data? I don't understand. Meanwhile, I looked at the St. Louis Fed, and they're at 2.9. So you got a low range of 1, you got a middle range of 2.1, and then you got a high of 2.9. So I don't know who to believe. All right? I mean, I don't know who to believe here. This is the Atlanta Fed, right? That line, they shot up there to 2.1. This is the New York Fed's most recent one, 1%. And then you got the St. Louis Fed, 2.9%. Okay? So we got to watch this, people. One thing I want to just close on is this week is the Federal Reserve 2-day meeting, right? It will commence tomorrow, and then they'll have a rate decision on Wednesday, okay? And there's a lot of people that are trying to guess, will the Fed cut, won't they? It's like a game to them, all right? But I don't think that's what we should be focusing on, what they do on Wednesday. What does it matter at this point, what they do on Wednesday, okay? And some people want to go out there and, got a lot of self-promoters. Well, I'm great at forecasting Fed rate cuts and nobody's better than me. Let's be frank, people. Let's be frank. What the Fed has done these last many years was kind of easy for everybody to kind of predict. There was nothing brilliant about any of this, okay? We had the Great Recession. They had to cut rates. For years, everybody knew what the story was. Oh, we can, but we won't. But we might. But we aren't. That's what how many quarters after quarter after quarter did they play that game? And everybody went along with it. Everybody knew they weren't going to cut. They weren't ready to raise rates. And that went on, that charade, for a very, very, very long time. Right? And then they kind of telegraphed that we're ready to do it. And they did it. It was no big surprise. So anybody out there who's claiming to be some mystic who knows the Fed and he's the greatest at predicting rate cuts, it's a lot of nonsense. He's a carnival barker. Okay? That's the bottom line. What does it matter if they cut rates in June in 2 days or they wait till July? Let's try to remember what the big picture is and what the trend is, okay? And where it's going as this ship starts to now turn around. The probability of a June rate cut, okay? These are the probabilities. Now, currently, the Fed funds rate is 2.25 to 2.5. Right? The probability of it staying the same is 82.5%. The probability of a quarter point cut is 17.5%. All right? So if you just look at the probabilities, okay, I mean 82% it's going to stay the same. There's a 17% chance that they cut rates a quarter of a point. All right? So if you want to bet with the probabilities, okay, in all likelihood, they're not going to cut this June. That's what everybody pretty much knows. So if somebody comes out there and says they're not going to cut this June, and they don't cut this June, and they're like, I'm the best, no, walk away. I'm telling you, walk away. He's a carnival barker, and they know who they are. But the July picture, it gets a little more interesting. Okay? The July picture. Now, there's a chance, a 14.3% probability of no rate cut in July. 14.3% probability, no rate cut in July. There's a 71.2% probability of a quarter point in July. So now we're up to 71% that in July they're going to cut a quarter of a point. And there's a 14.5% probability that they might even cut a half a point. Okay? So by the time we get to July, you got an 85.7% chance that they're going to at least cut 1/4 of a point, maybe even a half a point. All right? So you see where it's going now. All right? This is the July probabilities. All right? That's the 14.5. It stays the same. That's the 71.2. They lower by a quarter of a point. And that's the 14.5. They lower by a half a point. So, again, 85% chance they're going to be cutting by July. Quarter of a point, maybe a half of a point. All right? When we finally get out to September, okay, it gets even more interesting. Because now the chances of them just staying pat where they are now is 4.4%. Okay? 4.4, less than 5%. There's a 31.8% chance that they cut a quarter of a point. A 53.8% chance that they cut by a half a point. And there's even a 10% chance that they cut by 3/4 of a point. All right? So you got a 95.6% chance that they're cutting rates. Quarter of a point, half a point, maybe even 3/4 of a point by September. So between now and September, I'm not interested. Okay? I don't quite frankly care about what happens on Wednesday, to be honest. If they shock the markets and surprise them with a rate cut, so be it. If they don't, they don't. All right? But we all see where the trend is going. We have the manufacturing index, right, survey, breaking down. We have retail breaking down. We have smart people like Rabini, right? And I've heard him before, okay? But I listen, all right? Predicting a global recession sometime next year. We have other people that already say we're in it. We have an inverted yield curve, okay? And we have a 95% probability that the Fed will cut in some form or fashion by September to try to stave all this off as if they can. So this is the big picture. Gold gave up that 1340 level. There's a lot of people out there that are already, saying gold has broken out. I say no, it hasn't. Until it takes out 1340 decisively and holds it, my position. So we just have to watch and wait. That's what I'm doing right now. Today, everything just seemed very quiet today. Just like, let's just watch and wait. Watch and wait. And that's what I'm doing. Okay? So anyway, beautiful day out there today, people. If you can get out, take a nice walk. It's going to be interesting, all right, as these weeks and months unfold as we approach the end of this year, and see if they could just keep this thing floating for a little while longer. We'll see. Anyway, that's about it, people. Lord willing, we pick it up tomorrow. Ciao.